Gold prices continue to surge following President Trump's day one promises.
We will tariff and tax foreign countries to enrich our citizens.
But with his presidency bringing so much optimism for the stock market, what is really driving gold's price rise and how high can we expect it to go? Well, let's get into it. Trump threatens 25% tariffs on Mexico and Canada on February 1st, punting day one pledge. What they mean by that punting day one pledge is that, of course, he promised this would happen on his first day in office. He now has since shifted that timeline out, but only by a week and a half. And if you've been following anything that the president has done in the last 3 days, it is crystal clear that this is a man on a mission who feels the clock ticking of the next 4 years and is intent on delivering on his pledges. Now, the reason why this is so important is because it is widely agreed upon that tariffs are going to be inflationary. Whether or not you agree with an America First trade policy, tariffs are going to raise the price of imported goods, which inevitably get passed along to the consumer. If you look at this, plus tax cuts, plus mass deportation, again, regardless of how you feel about the policies themselves, they are all inflationary. And it might not happen overnight, but the effects of this will be felt, which is why we are also seeing this week 10-year Treasury yield falls as investors digest Trump's return to the White House. Now, the Treasury yield falls when investors are moving into safer assets. So what this tells us is that it's not just inflation concerns, because we know that gold always goes up when inflation concerns go up because it is a safe store of value, unlike fiat currency. But what this 10-year Treasury yield falling also tells us is that investors are concerned about increased volatility. There might be a lot of hope right now around policy promises or how they're going to play out, but ultimately the truth is there's a lot of uncertainty as well. Uncertainty around trade, around government spending, around global relations, all things that could have a serious impact on market volatility, as well as all assets that are dollar denominated. I mean, if we look at the stock market today, I've talked about this before, it is extremely concentrated at levels that we haven't seen since the 1970s. We know a handful of stocks are driving the majority of growth, and all of this growth that we're seeing is overvalued. It's just financialization and speculation. It's not based on real, tangible growth, meaning that all it's going to take is one single spark that could ignite a collapse. So what's going to be that spark? Well, 25% tariffs. This could ignite an escalating trade war. And with how intertwined our global economies are today, that could absolutely be the thing. I mean, it could be anything. I don't have to tell you that there are numerous threats right now to the system, but this could be one of them. And even if it's not, we know that an escalating trade war is going to bring more inflation at a time when we're expecting that the United States government is probably going to continue to spend, not cut back, meaning we could see inflation continue to rise at a far more accelerated pace. Those in power, the wealthy elite, they already know all this. They know what's coming. Just look at central banks. Look at what they've been doing, buying gold at record quantities.
Central banks globally bought a staggering $70 billion worth of gold. That's the most in 73 years.
Year over year. Why do you think that is? We can sit here and hate on central banks all day long, but I'll tell you one thing. They're not stupid. They're pretty smart in some ways, right? I mean, they know what they're doing out there. I read the other day that gold's global market cap to world GDP ratio has reached a record 16.7%. 16.7% at the end of 2024. To put this in perspective, that is doubled in the last 10 years and quadrupled since 2001. That is significant, and it's not by chance and it's not by accident. This is intentional stockpiling of gold because these central banks understand that the dollar's time is limited. Right? So as these central banks are ditching their dollar reserves and moving away from the dollar because its purchasing power is being inflated away and they don't want the threat of weaponization over their heads, they are moving into a safe haven asset, gold. that cannot be inflated, that cannot be weaponized, there is no counterparty risk. That's why we're seeing gold's price rise, because we live in a world that is built up now on global debt, financialization, and speculation versus real tangible growth, meaning that as this bubble, this everything bubble we're in, gets bigger and bigger and bigger, the risks get bigger and bigger with it. Which means that we can and we will be seeing more volatility. And when the crash comes, the fallout is going to be unlike anything we've seen before. But the way to protect yourself is outside of that bubble, outside of the system, right? If all of your growth is based on debt, it's not sustainable. That's the bottom line. So there's a reason that gold's price is going up and that I expect to see it continue to go up. And that is because it has true fundamental value, and its value is going to be a lot higher than the price we see today. When I talk about price, of course, I'm referring to the spot price, but I just do that because that's the price that everyone sees and it's easy to understand. But gold's fundamental value is actually much higher because gold is true money. But enough of that, because listen, I could go on and on about gold spot being based on paper contracts versus gold's real true fundamental value as real money. But the bottom line is all you have to do is ask yourself a couple of questions. I ask myself, number one, is the United States going to continue to overspend? Yes or no? Yes. Are geopolitical tensions going to continue to escalate? Yes, the world is on fire. Number three, are central banks going to continue to move away from the dollar, meaning the dollar's dominance is going to continue to erode? Yes, absolutely. If you answered yes to all three of those questions, which I'm sure you did, then it is very clear that gold's price is going to continue to climb. That is absolutely what we can see this year because uncertainty is here to stay, volatility is here to stay. And again, I don't have a crystal ball. I always say this. I don't know when the crash is going to happen. I don't know when the everything bubble is going to burst, but I don't want to wait and find out because every day I sit here in the dollar denominated fiat currency system, I am not only leaving my wealth vulnerable, but I am losing purchasing power with every second that goes by. And that is, of course, why I am such a big believer in holding physical gold and silver and making sure that you are diversified outside of the system. So if you do not already have a plan in place for all of the uncertainty that's going on in the world, everything that's happening, I highly recommend you get one. If you don't know where to begin or you want a second opinion, talk to a member of our team. We have expert analysts who have taught me so much. I've learned so much from them. So if you want to understand how they can help you too, call us at the number below, click the Calendly link in the description, and talk to someone from our team today. And as always, I so appreciate you being here. I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.